Hello everyone, I'm Mark Sain and welcome to Sain Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to the week 38 of the Forex market review. Today we're going to take a look at the daily FX news just to see a couple of high important news which is very likely to move the market. Then we're going to take a look at a couple of trades, one that was very successful over the week and which delivered, and a couple of trades coming up. Let's jump to the daily FX. We're starting on the daily FX today because we have some high important news which generally doesn't occur together within the same 24-hour period. So what you want to do is you go to www.dailyfx.com/calendar, or if you've been to the Daily FX, just go to calendar and click on economic calendar. This gives you the news coming up for the week, so you know which way the market may travel depending on what you think the news outcome will be, and that will determine what you should be doing with your trade setups or current entries in the position in the market. What you do first is click on your local GMT time. I've got GMT plus 10 for Eastern States Australia, and today we're only going to look at the high importance news which is coming up. So this afternoon, roughly probably after lunch Eastern States time, we're going to see Bank of Japan come out with some policy rate decisions. It's very unlikely they're going to decrease the interest rates below 0.01 or negative 0.01. But it's very likely they may increase stimulus. Now, they haven't done that for the last couple of months, and the yen has been strengthening over the last few months, so they really want to see the yen devalue so they become a better exporter. And obviously, the cheaper yen makes it more favorable for people to purchase from them. So they may come out with an increase in stimulus and increase the trillions of dollars they're already printing money, so further devaluing their currency. And within less than 24 hours, 4 a.m. Eastern States time in Australia, we have the US Fed decision. So they're going to come out and decide whether or not they're going to increase the interest rates from 0.5% higher. Now, there's only a 30% chance of this occurring, with 70% saying they won't. But I wouldn't be surprised that they come out and increase the interest rates, because they have been pushing for a long time that they wanted to increase it 3 to 4 times before the end of 2016. Now, it's only been increased once, and that was done early or late in December last year, and they haven't done it since. So they may surprise the market and they may do an interest rate hike. So because of these two decisions happening within a 24-hour period, I'm personally staying out of the market. I don't have any trade setups, which is good. But if you're trading something like the USD yen, you know, these two decisions, if the yen increased stimulus and the Fed increased the interest rate, that USD yen pair is going to skyrocket. So if you're against that trend, you're going to get stopped out pretty quickly. So just be very cautious when news comes up that it may affect your trade, and that you act with caution when it happens. So let's go ahead and jump to the charts. First chart we're going to look at is the pound USD. This is a trade that we're looking at last week. Here we have what appears to be the large AO for wave 3. We then draw in our Fibonacci retracement tool. We then see it come down, pull back. Didn't come back to 38.2%, so very likely it could still come back there. But because we had this double time, it's hit around the DSR zone, the dynamic support and resistance area. For me, it looked like a good selling opportunity. I then dropped down to the 4-hour chart, wanting to see my divergence with a higher high in price and a lower AO. I then dropped down to the 1-hour chart and to see if I can see that again, and here I did, higher high in price with the lower AO. So that was, for me, a good indication that the market could be pushing back lower, as well as bouncing off this DSR zone. We then see it push through this 200 EMA line, push back up, then took a short position around these levels here, You can put stop losses between 50 to 60 pips, or if you want to be conservative, up near 100, 120 pips. It's come all the way down to 380. So even if you were conservative, had your stops of 120 pips, you've easily made a 3-to-1 risk to reward. So risking $100 to make $300, and that's a good trade. Where would you think it should go to? Again, zooming out, and you would look at the next DSR zone, and that's down at these levels here. So definitely you wouldn't want to be pushing more than that 1 to 3 risk to reward, and you'd be getting out of these levels here. I personally made a 1 to 2 trade. I was out, and I'm happy with that trade. The next setup is the euro pound, which could be occurring. I like this trade because on the daily chart we have a head and shoulders pattern occurring. So what we do, we have the left shoulder, then we have our right shoulder, and then we have our head. So normally with a head and shoulders pattern, what we need to see is the neckline broken. So on a daily time frame, if this neckline down here, let me just draw it in for you, is broken, it breaks this DSR zone as well, it's probably going to push down and may find some support on this 200 daily EMA. Then you probably want to see it push back up into this resistance areas, and then you want to see it push back lower. How far would you like to go? Again, if you're trying to make 600 pips, you definitely don't want more than a roughly 300 pip stop loss. So if you were to go down to those lows down there and you wanted a stop loss up above this DSR zone up here, you really need to enter the market somewhere which gives you your good risk to reward. So somewhere around this level would probably see a 300 pip stop loss for your 600 pip profit, or even easy 700 down there. So that's how you would use your risk to reward. Don't just jump in the trade because you want to get in. Make sure it matches a good risk to reward, and if you miss the trade, you miss it. Other trades coming up are the pound Aussie and the pound CAD. Both of those are going the same trend direction, so you would only want to take one of them. Here we can see this large AO. We draw our line from roughly start to the end. Watch it come back to the 38.2 minimum area, which it has. It's now hit twice in this DSR zone, and it's pushing back lower. Dropping down to the 4-hour chart, the first thing we look for is our divergence, higher high in price with our lower AO. Drop down to the 1-hour chart, we see our higher high in price and our lower AO. So this one on a technical trade is all setting up. It's hit that DSR zone, it's pushed down through the 200 EMA on the 1-hour chart. What I would like to see it push back and retest this area, ready to sell it. How far do we think it will push back? Again, we want to use our Fibonacci retracement tool. So we're probably looking at 1, 2, down for 3. Whether or not you use this area here or this area up here, it doesn't really matter. The main thing is all of this is wave 3. Come back to zero line, so roughly around this point here is where the start of wave 3 is. It matches up with the 50% Fibonacci retracement and this 200 EMA. If I was to just zoom out a little bit, I can also see some resistance around here. You can see it's bounced a few times, and that matches up with the 50% area as well. So hopefully this will push back higher to around this level here. You'd be looking at maybe risking 150 to 200 pips, and then you want to see how far do you think it will go. Well, the next dynamic support and resistance zone is down here. So if you're wanting to get out around 600, 650 pips, the maximum risk you'd want is 300 pips. So having a stop loss of about 200, you can make a 1 to 3 risk to reward. If you want to be very conservative, you would have it up at these levels here, and then you can make a 1 to 2 risk to reward. So as I mentioned, pound CAD, the same setup applies. Here we have 1 up for 2, down for 3. Let me just draw those in quickly for you. So here's the start of wave 1, pushed all the way down to here. which then is the start of wave 2, push back higher, comes back to the minimum 61.8%. It's come back to the 78.6. Wave 2 just can't break the highs and close above wave 1. That's the main thing we've got to remember. We then have our pushback lower for wave 3. Now wave 3 we can identify as the first large AO. When it comes back to zero line, we look left and find the lowest point. So if we grab our Fibonacci tool and this time drag it from the beginning to the end of wave 3, we then have our pushback higher for wave 4. And we're looking at it come all the way back up to 38.2, and it's done that and it's hit it twice. We're now pushing back lower. So that's on the daily time frame. Looking for divergence, we have our higher high in price with our lower AO on the 4 hour. So that's our minimum requirement. And on the 1 hour chart, we don't have any divergence. We have a higher high in price, but a higher AO. So no 1 hour divergence, but that's fine. We had it on the 4 hour. We see this large AO down here. So we know that's wave 3. We draw a Fibonacci retracement tool. It didn't come back to 38.2. It almost did, so you might not take an entry here. So what I would like to still see, it push all the way back up. I don't like this one because it's already had its divergence, a lower low in price with a high AO. But it very likely will still come back to around the 50% mark. Zooming out, looking left to see where we have some support and resistance areas, and we do have some around this 50% mark as well on the pound CAD. So if you were to take this one because you also like the oil, and Canadian is heavily followed by the oil, then what you want to do is find out your risk to reward. So at the moment we're looking at a possible 600 pips down the bottom there. So you could put a 200 or 150 to a 250 pip stop loss. So in reality, if you were to get in there, you could put your stop losses all the way up at these levels here and easily make a 1 to 3 risk to reward. So taking that into consideration, yeah, you definitely might look at an opportunity around these levels here. So thank you for that. That was week 38 of the Forex market review. You may notice over the past weeks and months that I don't do a lot of trading, and that there is a special reason for it. It's because I'm a sniper. I sit there, I find the trade I want, and then I go for it. I'm not a duck hunter. I don't sit out there shooting at anything that comes along. My whole point of my trading system is that I look for the best opportunities and the best risk to reward. And even though I only take a few trades, that's great for me because I have a lot of free time to do the things I love to do. And that's all about trading, having time for family, friends, activities, and not sitting there with a 9 to 5 job. So take a look at your trading plan, have a look at everything, and here at Sane Investment Solutions, we wish you all the best in your success. Take care. Bye-bye.